So the interest rate projection that we present today indicates that the policy rate will remain at 4.5% until autumn before gradually moving down.
But having said that, looking at some of the market expectations, some market players, though, do see a possibility that you will move ahead with a cut in August, so before autumn. Is that too optimistic, therefore?
I think the interest rate path is our best projection that we have at the moment. That's based on our overall assessment of the outlook for the Norwegian economy and the balance of risks. Obviously, interest rate decisions will depend on incoming data. So we're signaling today that most likely policy rates will be kept at 4.5% until autumn. And the reason that we think that we will need to keep the policy rate elevated for some time is that inflation is still markedly above our target at a little under 5%. And in order to bring it down within a reasonable time horizon, there is a need for a tight monetary policy for some time ahead.
Right, but when you look at some of your inflation forecasts, you're now expecting inflation to move even faster, lower that is, for the rest of the year. If you continue to see inflation coming down faster than what you expect, is there a risk here that you might be forced to cut ahead of that autumn timeline?
Now, obviously, it will depend. What we do at the coming meetings will depend on incoming data. And in isolation, if inflation declines more rapidly than we now envisage, that could point to an earlier interest rate cut. On the other hand, there are strong cost pressures in the Norwegian economy, high wage growth, and the effects of the depreciation of our currency over the past few years will still contribute to keeping inflation elevated going forward. So there's also a risk on the upside.
Governor, we're getting to hear from a lot of the central banks, the Fed, the Swiss, and we also heard from central banks, some of the central bankers of the ECB, suggesting that maybe they'll go ahead with a rate cut around June. I was just wondering, given all of this commentary, all this action from some of your colleagues in other major central banks, do you feel pressure to announce a rate cut?
No, we will base our interest rate decisions, as we have done in the past and will do in the future, on the outlook for the Norwegian economy and for inflation in Norway. Now, obviously, we're a small open economy, so what other central banks do will matter for our decisions, in the sense that it can matter for the inflation outlook, among other things, through the possible effects on the exchange rates. But we will continue to set the interest rate that best fulfills our mandate for Norway.
Now, in the last 6 months or so, we did hear about some comments surrounding concerns on the real estate market, particularly when it comes to commercial property. This was also raised in Norway. I was just wondering, what are you seeing when it comes to this part of the market, and how big of a concern is it for financial stability this year?
Now, overall, we believe that our financial system is robust. Our banks are well capitalized and are so well prepared to handle any increase in losses. We have seen that commercial real estate prices have come down, and of course, higher interest rates do put pressure on their debt service capacity, and some companies have faced difficulties in refinancing their debt. That said, we do not expect losses in our banks to be large, and the financial system remains robust, and most companies will be able to maintain their debt service also with higher interest rates. But of course, the commercial real estate market is important for financial stability, as the banks have large loans to this sector and they have high levels of debt. So this is a market that we monitor closely and will continue to monitor closely also going forward.
I would also like to get your thoughts particularly on the banking system, because it's been a year since we saw some turmoil in the European banking sector, also stateside. And earlier today, we did hear from the Swiss National Bank saying that essentially banks need to be better prepared for this sort of eventualities. I was just wondering if this is also a concern that you share, and what are you seeing when it comes to the banking sector in Norway?
Of course, we're following the international debate, and I think we're all eager to learn from the experiences of last year. Our banks are well capitalized and also liquid, and we believe that they are well equipped to deal also with a period of larger losses or turmoil in financial markets. But of course, they need to maintain that capital base and be prepared. But for now, we believe that the financial system is robust.
And going back to some of the inflation dynamics here, looking at the forecasts, as I said earlier, you are projecting headline inflation to come down faster this year than initially expected. And you've spoken before about the risks of cutting rates too soon. But I was just wondering, where does the balance change, and when does the risk of waiting too long actually becomes higher than the risk of cutting too early?
Yeah, so there is a balancing of risks between, on the one hand, the risks of a premature cut leading to continued high inflation and depreciation of the currency. That is weighed against the risk of having an overly tight monetary policy, which we could risk then causing a more pronounced downturn in the economy. But if you look at developments since our December monetary policy report, activity in the Norwegian economy has held up better, unemployment has been stronger, and unemployment has been lower than previously envisaged. So we believe that the current interest rate projection provides a good balance between the objectives in our mandate. Right. And if anything, it makes us more confident that we will be able to bring inflation down without large costs in terms of higher unemployment.